Accruals and Prepayments. By the end of this video, you should be able to define the term accrual and prepayments, understand the purpose of an accrual and prepayment, and be able to calculate any adjustments that would be required to a set of accounts. This video has been produced because many students have asked me what is actually meant by the term accrual and prepayment and how does it fit in with accounts. So this hopefully will talk you through very quickly a process which I think is very simple when you get your head around it. So firstly, let's focus on the income statement. Now, the income statement is a document that is typically produced each year to show the profit and loss that an organisation has made. Now, we're going to look at the income statement and focus on how we might adjust that for accruals and prepayments. Let's take an example. B has a business and has to pay rent 1 month in advance of £2,000. If B completes his income statement at the end of the financial year in April, where would B actually include the £2,000? Would it go on the accounts of the previous year, or would it need to move forward to accounts of the new year? Think about this logically. Where are you going to account for that expense? Because he's paying it in advance, but he's doing his accounts of the previous year. Well, the answer is that's an example of a prepayment. Now, a prepayment is an expense that has been made in advance of the trading period that it relates to. So, for example, the year that the cut-off the accounts have been made. This means that it's going to be removed from the expenses section of those accounts because obviously he's paying that for next year. And it's going to be placed as a current asset in his statement of financial position. If you're unsure on what's meant by a statement of financial position, check out one of my videos that explains that and goes to the different areas. Remember, a current asset is something that can be turned into cash within a year. So it's obviously a positive for his business in that sense there. Typically, it includes examples like bills that have to be paid quarterly, so are paid in advance. So, for example, I've adapted the income statement, as you can see on the right-hand side of the screen. So instead of reading maybe paying rent for £26,000, we'd actually read paying rent of this year for £24,000, so £2,000 each month. That's what he's paid in this trading period. Remember, the next £2,000 are going to move forward to the next set of accounts, the next income statement that he produces next year. Here's another example. B has agreed 3 months credit terms with his supplier of honey jars. Now, B has ordered £12,000 worth of honey jars from his supplier at the end of March. Now, remember, he's producing his income statement at the end of the financial year, which obviously ends on April, the beginning of April, on April the 6th. So where's he going to include that £12,000 which he spent on his honey jars? Where would he include it? Would he include it in this year's accounts or in next year's accounts? Hopefully you can work out the answer already. This is something called an accrual, and that is based on the idea that it's an expense that's being paid after the trading period that it related to. So, for example, he's going to settle this bill after he's produced a set of accounts. However, as a result of that, he needs to show that in this set of accounts because it's a cost that's been appropriated to this year's set of accounts. So this means it's going to be added to the income statement for this year, and it'll be shown as a current liability, so money that he owes out in the short term on his statement of financial position. Now, typically examples include any expense where credit is given. So, for example, if you look on the right-hand side of your screen, I've adapted that it would have read maybe £50,000 for his raw materials, but he needs to add on that £12,000, so actually it's going to be £62,000 that it's going to cost him to actually produce their materials in this financial period. Okay, you may be thinking, why is all this important? What's the point? Just move it on. Well, that's all because financial records have to show a true and accurate record of the organisation's activities for the year. Now, if you're producing those accounts for the year, you want to see how much it actually cost the business in that year. Did it make a profit or a loss in that year? Not moving on to another year. This means that you've got to take into account these adjustments and ensure that the expenditure actually matches a trading period it's related to. Hopefully, that makes some sense and has been explained in a simple way that you can understand terms which many people get confused at. If you're still not sure, don't worry, watch the video again. I'm pretty sure that when you've watched this video a few times, you'll definitely understand the process of prepayments and accruals. Thanks for checking out the BeeBusinessBee YouTube channel. Don't forget to click the subscribe button down below to subscribe to our YouTube channel. Don't forget to follow me on Twitter. It's at BeeBusinessBee. Also, give the Facebook page a like. It's facebook.com/BeeBusinessBee. And lastly, don't forget to check out the online hive of activities found on BeeBusinessBee.co.uk, full of quizzes, activities and resources. And remember, until next time, keep buzzing.